Hi everybody, Alex Deploy here from Expert Forex, and in today's video we're going to talk about the changing market and the carnage of blown accounts that is happening right now. And I love making videos about success in Forex trading, but unfortunately there is a time in the Forex market which is very sobering, and the Forex market keeps on reminding us how dangerous it can be, and it's causing many blown accounts and lots of carnage in the market. And I wanted to inform everybody about what is currently happening. Now, when one trades the Forex market, you've got to put your eggs in one basket. You have to decide whether you are trading a sideways strategy or a trending strategy. And when you do that, you stick to that strategy based on what the market has done quite recently. Now on your screen you can see a chart of the pound yen, and the chart shows a nice steady upward trend but nice retracements going on, and that suits our profit retrieval techniques that we trade in about 4 of our EAs. And there they go. This is a nice, actually a very nice type of price action. But then suddenly the market changed, and it went from having small trends of 600, 300, 500, that type of thing. All of a sudden it shot to 1,000. But there was a nice retrace, which was quite good. And then it shot to another 1,000 trend. So suddenly the market went from having an average of about 400 pip trends to having a couple of thousand pips. And then suddenly it almost had a 2,000 pip trend. And so what happens if you're trading a sideways strategy and suddenly the market starts trending completely out of character? I mean, these trends, 2,000 pip trends, are just completely out of character. Obviously there will be problems, and one of the problems is that it's very easy firstly to see these trends historically. It starts trending, you know that the average trend is 400, so you don't panic, you keep on entering deals, and those are the early deals that actually cause the problem when the trend turns into a 2,000 pip trend, because those are the ones that build up the losses. So that is what is currently happening. I'm going to give you a couple of examples of currencies that are affected, and you'll see it's not only the yen currencies, there are a lot of other currencies that are affected in this way, but the trends are just enormous. We have implemented some changes before these trends, in fact, which are pruning options, and the trends have been so strong that the pruning options have had limited benefit because the retracements in the trends have just not been big enough. So let's have a look at some other currencies. Here's the pound New Zealand. Now again, this is not a yen cross, so here's most probably the best example. Here's a nice little sideways movement happening here. The average trend was about 300 pips, and you can see it up and down, perfect for the profit retrieval process. Up it goes, and then suddenly it hits a trend of over 1,000. Now, to go from a vibration rate in the market of about 250 or 300 to 1,000 pip trend is just astronomical. And as I say, it's not when the trend breakout happens, it's actually all of the trades that you've entered right in the beginning of the trend that causes the problem. Okay, so that is why some of the accounts have now actually blown. And the service most badly affected is our link service, where accounts that traded these kind of currencies have either blown or are in serious trouble. So there we are, 1,000 pip trip, and then it did a reversal and made almost a 600 pip reversal. So from going from 300 to 600, it's just crazy. Market has gone a little bit mad. Let's have a look at a few more. And here's the Aussie yen. Aussie yen's caused a lot of trouble too. Also very nice sideways market over here, going up slightly, but because of the retracements in the market, it's all good. That's like that's like an upward channel. And then suddenly it broke out, started trending, a nice reversal. That's not too bad. then big trend 600 pips, and now it's done a 1,200 movement. So from going from an average of about 400 or 300 pips, it's now hit a trend. And as you can see, it hasn't stopped. It's only the weekend has stopped this particular trend. So this is the Forex market telling us or reminding it that it is still the boss, that in spite of how much analysis we put into the trading techniques, how we refine our settings were pretty much refined at that point. And once it starts trading, there's nothing much you can do because you are committed to the transactions that have been entered before the trend actually happened. Another example, nice steady retracing trend happening, and then suddenly a 1,500 pip trend from an average of about 500 pips. Again, 3 times the normal trend that is anticipated. And as I said, it's not over yet. Here's the Euro Oz. Same thing, sideways movements, a little bit of a trend there, sideways movements, and then suddenly a burst of a trend of 600. Now that's not all that big, but it just shows relative to the previous trend, which were in the region of 200 pips. So those vibration rates were 200 pips, and it then shot to 600 pips, another 3 times the norm. Now, all of this was actually started by the yen a couple of months ago, where it broke through the 150 barrier and caused a lot of volatility in the market. And the yen is still up to it. You can see that it's still trading at quite volatile levels, but even so, a 1,500 trend with no retracement is very hard for sideways trading techniques. That you only realize, in fact, as you can see, the market was actually trading sideways at that point when that trend happened. And this is most probably the final example, and again, a very nice sideways movement. And you can see the vibration rate there was most probably just over 120 pips, broke out, and then this massive trend. And it looks massive on the screen, it's 300 pips, but if the average here was 80 to 100 pips, that 300 pip is exceptional. And that, in fact, is why the carnage is happening in the market. Many of the linked accounts are being blown, and many of our robot traders are battling with their trading. But the good news is there are survivors. It's not the end of the world. It's only accounts that have particularly traded those particular settings, and if they've been exposed to those kind of trends. So our account linking service is still doing well. The new Lucky Trader, in fact, you can trade it as a free EA, or you can trade it as a purchased EA, is doing exceptionally well because we've built all these kind of precautions into the Lucky Trader. The Lucky Trader has survived. I'll show you some of the results that we're getting there. And then the MAM accounts have also done pretty well in this chaotic market. So let's go and have a look at some of those. Okay, and here are the results of the recently launched Lucky Trader. You can see the balances are nicely positive. The equity is nicely positive overall. So the Lucky Trader is a survivor because we've built in the pruning into it. We're trading the right currencies, and we are trading the correct gap sizes. But because it's still young, it is not included in the linking service. And here's the linking service showing lots of accounts with very small floating losses, in other words, drawdowns, and you can see the gains that have been made by some of these accounts. That's a 350, that's a 250% gain, that's a 150% gain, 150% gain, there's a 200% gain. So there's a lot of accounts that are still drifting around in the linking service that are producing really good gains. And then if we look at the MAM service, these are managed accounts, and they are overall, they are 12% down. Now, 12% down sounds a lot. In fact, that is well managed loss containment. 12% is nothing in this volatile and erratic market that we're trading in. And you can see some of the money managers have done better than the other money managers. So very happy with the MAM accounts. Although they are negative, this is actually a positive result because it shows good risk management. So if you are a trader, there are a couple of things you can do. Firstly, avoid the trading currencies, and I'll show you how to do that. Then, if you're going to stick with the trending currencies, increase your settings. So in the case of our profit retrieval type of settings, instead of having a gap sizes of, let's say, 50 pips, go to 100 pips, go to 150 pips. Increase the gap sizes tremendously so that you can weather the storm of a 1,000 pip trend or a 2,000 pip trend. Also, start using trending currencies. Now, the problem with the market is it goes sideways, trends, then goes sideways, trends, then goes sideways. So you don't know when to use trending currencies and when strategies and when to use sideways strategies. And you only find that out quite late. They are crystal clear on historical charts, but I must tell you, when you're trading live, you cannot tell, firstly, whether a trend is developing, and secondly, when the trend will stop and reverse. You cannot tell those things. So even if you notice a trend starting, you say, okay, no, the average trend is 300. I'm happy to let it go to 400. So, and then suddenly it goes to 1,200 and it catches you by surprise. So you can have a go at using trending strategies, but those will also get you in trouble in a sideways market. And then the other alternative is just to stay out of the market. There's a lot happening in the world. There's problems in Iran and Israel, and all over the world there are problems, and there are situations that could blow the Forex market apart, and sometimes it's just best to stay out of the market. That's always an option. You can see we are living through very special times, and in fact, that's a Chinese curse that says, may you live in exciting times. Sounds like a very nice thing to say, but it in fact what we refer to as a Chinese curse. So here's an example of, this is a tool that is freely available. A link to this tool will be in the description of the video as well as in the first commentary. But this is a tool that measures trends, and it shows you the currencies with the biggest trends, the longest trends, there you can see, and it shows you the currencies with the smallest trends. So obviously when you're trading sideways, you use the currencies that have a very low trendiness, and if you're using trending techniques, you use the currencies that tend to trend. So this is an excellent tool for that kind of decision making. And it is free and it is downloadable. Then on our marketing page, the Expert Forex marketing page, we have our list of set and forget EAs that are available. You can see each of them have been classified as either sideways currency or a trending currency. Those codes are explained over here, and you can just go and have a look with trending EAs and sideways EAs. Now, this, as I said, this is not a video that I like making. I like making success Forex videos, but at the moment it is important for traders to understand, traders and investors to understand what is going on in the market, and that they have to trade responsibly. They've got to look after their investments. If you're investing in an account, make sure that it's not exposed to the currencies that are shown in that trend analyzer and that type of thing. So use your common sense. Either don't trade certain currencies, or if you're going to double or triple the normal settings that are required, and just overall treat this period as a dangerous period. As always, links to anything mentioned in this video will be in the description of the video as well as in the first commentary. So from me, Alex Deploy, cheerio.